Welcome to the Cover Your Assets podcast, a show for the physician who understands the importance of protecting everything you've worked so hard to achieve. If you're ready to find the peace of mind that only financial security can bring, let's get started. Here's your host, Billy Gwaltney.
Hello, welcome to today's episode of the Cover Your Assets podcast. I'm your host, Billy Gwaltney. As always, it's good to be with you. In today's episode, we're going to talk about how group long-term disability factors in to the maximum coverage calculation as an attending physician. I work with thousands of physicians across the country. As our clients become attendings, then they're interested in increasing their coverage to keep pace with their higher income. And I would say probably 90% of our clients have group LTD or long-term disability. LTD is the short acronym for that, through their employer. Typically an employer will, if they work at a health system or a large practice, their group LTD will be like 60% of their income, up to a maximum cap of $5,000 a month or $10,000 a month, or maybe $20,000 or $30,000 a month. Whatever the details of that coverage are, typically the most important detail is the maximum monthly benefit cap. It does factor into the equation for how much coverage you can buy based on your attending income. The higher the maximum benefit cap is, the lower the amount of private specialty coverage you're eligible to buy. So someone whose income is $400,000 without any group long-term disability, they may be eligible for typically maybe up to $16,000 a month, somewhere in that ballpark. And they have a friend who makes the same $400,000, but they work at an employer that has a group LTD policy with a maximum cap of $15,000 or $20,000 a month. They may be only eligible for about $10,000 or $11,000 a month of coverage from their private specialty policy. So it's going to impact the amount of private coverage you can get if you have a group long-term disability policy. Now, sometimes an employer will say, we're going to give everyone or require everyone to accept a base policy, group LTD policy of say 50% up to $5,000 a month. And then you have the option to buy in voluntarily and pay for a higher policy that would cover 60% up to $20,000 a month. If you take all of it and have the $20,000 a month cap, then that's going to reduce the amount of private specialty coverage you can buy. If you opt out of the voluntary portion and only accept the portion that they require you to accept, which has a much lower cap, I think I said $5,000 in my example, but whatever that cap is, if it's lower, then that would allow you to buy more of the private specialty coverage. Why this matters is at time of claim, okay? Private specialty coverage is much more comprehensive from a definition standpoint, and much more likely to pay, bottom line, at the time of a claim. The vast majority of disabilities are not catastrophic. They're usually illnesses. Over 90% of claims are illnesses. The biggest percentage or portion of those illnesses are musculoskeletal conditions. So let's say you hurt your back, you can't go into clinic or do surgeries or walk around a hospital or a clinic and go from patient room to patient room. So whether you do procedures or not, you're not able to do the job you were doing before you hurt your back. So your specialty, you can't do it. Your private specialty policy would pay you if that happened. You would then have the freedom to stay at home and do virtual medicine or telemedicine or consult or write a book or whatever and make an unlimited income, and there's no penalty to your benefit, okay? It's the best coverage you can get. Conversely, an employer's policy, and it doesn't matter who the employer is, okay, because adverse selection kicks in at every employer policy, which by law, that means that by law, they have to cover all employees regardless of health. In the insurance world, that's called adverse selection, and insurance carriers will move heaven and earth to avoid it because it can bankrupt them. And so the way they avoid it in the group disability marketplace is not by not selling your employer a group LTD policy. It's by selling them a group LTD policy that has watered down definitions. And even if they call it own occupation, how they define that is very different than your private specialty coverage, because it's going to be much broader. So in that example where you have a herniated disc and can't go into work, if you can do telemedicine or virtual medicine, there's a really good chance they're going to fight you on the reality that in their mind, according to their terms and their methodology, you are not disabled. You can still practice as a physician from home on a laptop, and COVID proved it, right? So we have clients on claim. They all get paid from their private specialty coverage, but most of them don't get paid from their group employer policy. So if you are voluntarily opting in to pay for more group LTD, it may look good on paper, but at claim time, that would be painful. You would regret that typically. You're going to want at time of claim to get your hands on as much of the private specialty coverage as you can. And so, unfortunately, even though the definitions are much weaker, the group LTD through your employer still impacts or limits the amount of private specialty coverage you can buy. So if you have the opportunity to opt out of it, most of our clients will opt out of it, and only accept the portion that the employer requires them to accept, so that they can then maximize their private coverage. Then over the course of your career, as your income continues to go up, or you end up transitioning or leaving or going to an employer where there's no group LTD or less group LTD with a lower cap, then you can continue to increase through your private specialty coverage. Bottom line, the group LTD does impact how much you can buy. At time of claim, to be clear, you're eligible to collect from both. Okay, so they would not offset each other. There's not a primary and a secondary at time of claim. So you would be eligible to collect from both. It's just that you're likely going to collect from your private coverage, and you likely won't collect from your employer group policy. It's not your employer's fault. It's adverse selection, and it's just the nature of the insurance world. Much more difficult to collect from group LTD policies. Hope this helps. Happy to discuss your situation in more detail. Message me or text me at 704-270-2376. Again, 704-270-2376. I look forward to speaking with you. Thank you as always for your time.
Thanks for listening to the Cover Your Assets podcast, an Odd Conduit media production. New episodes drop every 2 weeks. If you've enjoyed the conversation, subscribe, rate, and review this podcast. For more tips and advice, visit the website and YouTube channel. Check the show notes for links. Join us next time for another episode dedicated to helping physicians like you get your disability insurance right and protect your way of life.